AAA is a grade assigned to a security by a rating agency such as Standard & Poor's, Moody's, or Fitch, indicating that it is highest quality and has the lowest expectation of default risk. Even so, in 2007 to 2009, thousands of securities rated AAA turned out to be lowest quality with the highest default risk. In the first 3 quarters of 2008, more than 11,000 issues of AAA-rated mortgage-related securities had their ratings abruptly downgraded. The prices of many fell 70% or more. Investors lost hundreds of billions of dollars. See also credit rating. Account, noun. The money you have at a brokerage, investment advisor, bank, or other firm subject to continuous and sudden change from income, profits, losses, and fees. The firm will use a monthly or quarterly account statement to call maximum attention to the income or profits while minimizing or disguising the losses and fees. The word has several alternate meanings. To account is to tell a story, particularly in order to justify one's actions. To call to account or bring to account means to make a steward responsible for what has happened, especially if the outcome was harmful. The final account is God's ultimate rendering of justice on the day of judgment. The first of those alternate meanings is retained in the modern financial usage of account. The others have conveniently been forgotten. Account is also a slang term for client. "This gentleman is my best account," said Mo Dinero, a wealth manager at the brokerage firm of Blitz, Baum, and Newcomb in Eureka, California, pointing to a name on his computer screen. "I earn more fees off him than I do off anybody else." Account statement, noun. A document from a bank, brokerage, or investment firm that is designed to be incomprehensible to clients, thereby preventing them from asking impertinent questions like, "Who set my money on fire?" You might be able to recognize your balances and recent transactions on an account statement, although that will be easier if you earn a PhD in cryptography first. Accumulate, verb. Accumulation, noun. A term often used by analysts to recommend a stock without uttering the word buy, thereby enabling them to duck at least some blame if the stock later collapses. "Why did you recommend buying Vertiginous Corp at its all-time high?" asked an angry client. "I lost 88% in a week." Kent B. Thoreau, a senior analyst at the brokerage firm Schmutz, Garbisch, Dreck, and Pugh, responded calmly, "I didn't recommend buying it. I recommended accumulating it." Acquisition, noun. A transaction in which one company pays too much to buy another. As Warren Buffett wrote, if a CEO is enthused about a particularly foolish acquisition, both his internal staff and his outside advisors will come up with whatever projections are needed to justify his stance. Only in fairy tales are emperors told that they are naked. Act, verb. What a financial market supposedly does as if it were a living creature with a sense of self and volition. Traders and market analysts will say, "The market isn't acting right," or "The market is acting like it wants to go up no matter what," or "The market is acting nervous." Research led by Michael Morris, a social psychologist at Columbia University, shows that investors are more likely to expect a market trend to continue when stock price changes are likened to physical actions. Such active images as, "The Dow fought its way upward today," or "The market broke free and climbed higher," impart a power of their own. People are inherently excited by motion, especially when it is described in terms familiar from our social interactions. Depicting a financial market as an athlete sprinting, leaping, and cliff diving makes news coverage much more exciting than a droning flux of numbers. And the belief that markets act is centuries old. In 17th century Amsterdam, stocks were called acti, or actions, and a trader was known as an actionist. In France, traders were called actionnaires.